What's going on, everybody? Welcome to the market update. So we got prices of Bitcoin at 22,000. Looks like we had a nice pop in the overnight session. Probably liquidated a good amount of shorts on the way up. As you could see right here, this is the short liquidation data. And you could kind of see from the liquidations piling up right here, we had about $400 million of liquidations overnight. So definitely a interesting move in the market. What we're going to see now is, can we stay elevated near these highs, or do we start breaking down further? All right. So stay tuned for the rest of the update. Real quick, if you have not signed up for Bitget, the link is below in the YouTube description. Again, they're giving away a ton of rewards. They have a one BTC campaign, which is to be split among 100 traders, as well as $4,000 in rewards opportunities. Again, the link is below in the YouTube description or in the top right. I've started using Bitget for the past few weeks. I like it a lot. They don't have KYC, so if you're trading in Canada or the US or the UK or Europe, it's pretty fantastic, or even Asia. I like the exchange a lot. One of the features I like a lot is their Coin M futures, which is if you're taking on any position and say you put up BTC or some other asset as collateral, you can make your P&L in that particular asset. So I liked it a lot because I've used FTX for the last almost 2 years or so, and on FTX, if you guys are familiar with it, they would only pay you in USD, right? Because you get to use everything as collateral. So here it's kind of nice because in markets that are uptrending, if whatever long position that you're in is going up and your P&L is going up, that means your collateral is also going up, right? So it's actually a good thing to have these CoinM futures as a tradable contract. Okay, so anyway, I like FTX a lot, but Bitget is probably one of my more used exchanges now, just because they have so many different features, and they have this thing called grid trading, which is automatic trading where the bot trades on your behalf, which is really cool that it's built into the exchange itself. Okay, so anyway, do your due diligence. Obviously, I have started to use the exchange for the past few weeks, but I did my research. Please make sure you do yours, okay? And again, hit the thumbs up on this video if you like our content. I've been doing a lot of free content for the past several years, but I do appreciate if members would like to join our Advantage community. You can hit the products page right there, thealphatrades.com, and join the Advantage membership right there. We have a private Discord channel where we discuss all things related to Bitcoin, long and short positions, all things related to altcoins, long and short positions, spot buys, farming, staking, lending opportunities. And then we have a NFT area as well. And then, of course, we talk about US equities as well. And the interesting thing about our market right now is we are so heavily tied to what's happening in the stock market that it's almost inescapable that crypto does something without sort of the consent or the approval of the stock market. And so it helps having an equities dedicated section, because one thing that I pointed out in equities, I think a week or two ago was, if you're looking at the market as a bull or a bear, here are the conditions that you want to come through from the macro perspective, right? So for example, if you're a bull and you want crypto to go up, well, then you want the dollar to start breaking down, you want oil and copper to start breaking down, and you want US equities, obviously, to start going up. I think few conditions have come true, which is the US equities have bounced a decent amount, so that's good. The dollar has not eased off all that much. In fact, it kept climbing and climbing. Maybe there's some sort of reprieve now where crypto can go up and the dollar can come down a little bit. But as you can see, the dollar has been on an insanely strong trend upwards. And if you compare this to BTC, here's kind of how that looks, right? Oh, whoops, let me get rid of this. Let's try that again. Okay, so here's kind of how that looks, right? If BTC is this brown chart right here, and these are the candles of the dollar. When the dollars start to move up from this point onward, it's basically inverse relationship, right? So effectively, BTC will start moving up as a dollar starts breaking down further and further. Okay, and that's not just one correlation. There are other correlations in the market as well, such as oil and copper, which are directly related to inflation prices. You definitely want to start seeing oil start to break down, because that would mean that inflation may have peaked and prices may start coming down. Because remember, the central banks around the world, that's the one thing that they're very, very afraid of is higher inflation prices, for consumer goods, for people. And that means that the Fed will keep raising interest rates, which makes money become more expensive, which makes risk assets like crypto and stocks definitely a far greater risk to hang on to versus simply just buying commodities like oil or copper or gold or the dollar. Okay. So a few things that are coming up related to sort of the macro information is next week, right? Next Wednesday, we have the FOMC meeting coming up, right? So Jay Powell will have a conference around 2:30 p.m. Wednesday, July 27th on the Eastern time zone. That should definitely be interesting because we get to see how aggressive the Fed is going to be regarding their interest rate hikes. Do they back off because they feel like they may cause a recession in the economy? Do they keep chugging forward? Do they raise interest rates by 75 basis points or 100? And do they also target 100 for the next meeting? I think that will be very telling for the market. Now, if we look at crypto, right, we're at a very unique area, especially in BTC. In BTC, I still believe that this consolidation before a breakdown is quite similar to what happened here. But the one thing I will tell y'all is that you do not want to fight these rallies in the midst of these kinds of market conditions. Whether it's a bear market rally or this is the beginning of a bull market, it doesn't matter. Okay. The point is that when the market has these sort of eye-popping numbers, especially on alts, as you can see from the beginning of July. So this is the time scale from the beginning of July till now. When you start seeing Matic and Curve and Aave and ETH and some of these assets go up, 40, 50, 100%, that's not really a trend that you want to be fighting. Okay. If anything, enjoy it. If it's a new bull market, great. You might be well positioned into, Matic and Aave and whatever, right? If it's a bear market, you still want to get long and not fight it because you're going to get blown out of your position. So if you shorted Matic or some of these assets anywhere in the last like 2 or 3 weeks right there, right? Or the last month or so, you just got absolutely wrecked on the way up because prices are up almost 100% over the last 2 weeks and maybe 150% from the lows down here, right? So point is that you want to be very cautious in these conditions. Yes, it's possible that the market has already sort of peaked. Yes, it's possible that maybe from here, this is the bear rally and from here it starts going down, right? That's not sort of an impossible feat. I get it, okay? The question is that how do you react to situations like this, okay? I believe that the market is going to be broken up in segments. What I mean by that is altcoins are going to be moving at different paces and they're going to top and roll over at different paces. So Matic has probably the best sort of fundamental catalyst. Number one being Ethereum is going through its own merge, right? I spoke about this on my timeline. Ethereum is having its merge, I think September 29th, if I'm not mistaken, right there, right? There's the Gorley release coming up on 28th and 29th of July. And then the merge is coming out on September 19th, okay? Now Matic directly benefits because Matic is technically considered sort of an L2 partner, like a bus on top of Ethereum. Okay, so Matic, I think, will benefit. On top of that, Matic is trying to become sort of its own standalone chain, standalone network, where it is having its own sort of network effects I think it had Web3 partnership with Disney, if I'm not mistaken, right? Web3 partnership, Disney, Matic. Let me see. Yeah, so you can see, you know, I don't know how valid this news is, but I saw this somewhere on my Twitter feed. So, you know, I'll let y'all do the research on this. Oh, it looks like CoinDesk picked it up, right? So yes, it seems relatively true that this is a thing that's happening, and that probably made Matic pop. Okay. One thing I'll tell you is if you have not been through bear markets before, whether the stock market or whether crypto, things can get very, very irrational in bear markets, just like they do in aggressive bull markets. Okay. But within these bear market rallies, and again, I'm not 100% defining this as a bear market rally. I'm just saying if it is a bear market rally, then these conditions that you're seeing right now, the emotion that you're feeling, that's exactly what the market is trying to induce. It is trying to induce this FOMO, this, you know, this sense of like, holy shit, I missed the bottom. I have to buy now. We're starting a new bull market, right? That is exactly what the market does very, very well in these bear market rallies. Okay. So be extremely careful, because here's what I remember from 2018 in Ethereum. Okay. If you were not around back then, things seemed very calm and quiet up until like this point sucked. This point was like, oh, okay, we're starting a new bull market, right? Alts are going to start ripping. I didn't really believe that. I actually thought BTC would start ripping up, maybe Ethereum too, but then I thought alts would, you know, completely get destroyed, because back then almost everything was garbage, right? Like everything was vaporware. Everything, you know, really did not have a product, a use case, a product market fit, real users or anything. This time, okay, yeah, there's a few assets out there, a few projects out there that are building real world stuff, still have utility for their token, still have user bases. But, you know, anyway, so getting back to this area, I remember this rally very, very specifically because it was just at the, you know, very beginning of sort of a spring / summertime. And I remember thinking to myself, okay, this definitely seems like, you know, a nice bounce back. But guess what? From the high right there to the low, right? I was looking at 50 to 61.8%. And I was like, okay, I think this can probably start spiking up here, but then I'm going to start closing out my position because I had picked up a little bit of ETH way the heck back here. I remember around like $375, $400. It started popping. And I remember when it started hitting this 382 area, and I saw 2 consecutive weekly down weeks like this, I said, okay, shit, like this thing is starting to roll over. And it did. And several months it did, and it did. And I did not buy anywhere here. Okay. I think I bought somewhere up here, maybe like the following April, right? So way the heck over here. And then obviously, you know, you guys know how it went in 2019 and 20, right? The point is that the conditions right now for Ethereum, for alts, in my opinion, are evoking the same kind of conditions, the emotions, the bear market FOMO, as it did back here. And I don't know why I feel that way, but it sure as hell feels to me that that is exactly what's going on. Because there's a few things, once again, from the macro perspective that are unclear, which are these things right here. Dollar to start breaking down. Has inflation peaked? Oil and copper, do they start breaking down? Maybe, you know, reducing inflation. And then, of course, what matters most is how are US equities doing, right? Are they also in their own midst of a bear market rally? And if so, right, well, how high did they go? And then after, when they roll over, how low did they go? Well, if they start breaking down further and further, okay, here's kind of my levels that I'm watching for the S&P 500, just in case we do something like this, right? Say we do, you know, pop up here, and then we start to roll over, right? Maybe around October or November. This is the area right around 3,500 points right here, where I would expect price to land in and price to bounce in. Okay, this area right here. So in which case, from here on up towards 4,100 points, that's about a 5-6% move. From there back down, that's another 13% move. From the all-time high down, that would be about a 26% correction in the market. Okay. Now you may think, oh, 26% correction in the indices, that's a lot, but in reality, it's actually not that much. And I'm going to show y'all why. And once again, remember, these correlations of the stock market and crypto are still very much tied together, right? We have to respect that. We have to accept the reality that crypto money flows, crypto investment cycles are right now tied with US equity markets, right? As well as the macro picture. So you guys need to follow this person. And I found their data point, which is really, really fascinating about bear market rallies, okay? So where is it? I think they posted about it yesterday. So let me see here. There's some really good data on it. So that's why I wanted to point this out for y'all. Okay, so here's this thread. Again, follow YP Alpha if you have not already. Okay, so he talks about, watching for 20%. Market cycles are measured from peak to trough. Stock indices officially reach bear market territory when closing prices drop below 20%, right? By definition, we're technically, as per the indices, we're technically already in a bear market territory, or we reached it. Right now, we're just inside of it, okay? So we may start hearing talking points of, oh, well, crypto is, or stocks are not in a bear market rally anymore, or they're not in a bear market anymore, right? Maybe they start turning around, okay? That's point number one, all right? I want to see some other stuff. Yeah, so see, a new bull market begins when the closing price gains 20% from its low. Okay, so we're not there yet. So 20% from its low, meaning from down here, up 20% would take us to about 43.50 or so, or 43.60. That means that people will start talking about a new bull market when we get up to about 4,300 points, okay? Again, there's a point to make, so hang tight. Okay, bear markets are normal. There have been about 26 bear markets in the S&P 500 since 1928. However, there have been about 27 bull markets, and stocks have risen significantly over the long term. Bear markets tend to be short-lived. The average length of a bear market is about 289 days or 9.6 months. That's significantly shorter than the average bull run, which is about 991 days or 2.7 years, okay? Let me see here. Okay, half of the SPX strongest days in the last 20 years occurred during a bear market. So again, this goes with my point that what you're feeling right now, the pops that you're seeing across the board, the way especially crypto markets look, right? This is exactly the kind of emotion that is supposed to be evoked within a bear market rally. A bear market doesn't necessarily indicate an economic recession. There have been 26 markets since 1929, but only 15 recessions during that time, okay? Let me see here. All right, bear markets can be painful, but overall, markets tend to have a positive majority of the time. Of the last 92 years of history, bear markets have comprised only about 20.6 of these years. Put another way, stocks have been on the rise 78% of the time. So the point I'm trying to make is that, within the context of this rally that you're seeing, make sure you recognize that if this is a bear market rally, when you start feeling the most amount of euphoria, okay, this is how bear markets work. When you start feeling the most amount of euphoria and you want to really, really FOMO, that might be the exact point where you actually need to start unwinding and getting out of your positions, okay? It works the complete opposite way of, any bull market rally. And why is it that we need to think that way? Well, because if the market has truly bottomed, right? First of all, markets don't just quickly V-bottom and just start taking off. COVID crash right here was probably, sort of a unique event that happened across the entire world. However, this time around, this is a very different market. We are coming off one of the largest liquidity flush environments ever recorded in history, right? The Fed flushed the market with money over the last 2020, 2021, and now they're trying to take away that punch bowl of liquidity, and it's really starting to hit the markets hard. So if that's the case, right, and the markets are going through a new bull market or a bear market rally, right, however you want to look at it, well, you still want to start paying attention to your own emotions, the sentiment check around you, around crypto. And especially one of the most important points is you do not want to fight and keep shorting on the way up, because the bear market rallies, I'll tell you one thing. I remember when this thing was going up back in April 2018, right? I remember a ton of people trying to short this on the way up. And though they were right and markets eventually rolled over, guess what? From the low right here, from 360 to about $800 or so, they actually got squeezed out. They got blown out of their short positions. They got liquidated, and then the market finally rolled over. I am almost expecting a very similar situation right here, okay? Which is that if this is, say, a bear market rally, this thing is going to go pretty damn high. It may go to 1800, 1950, which is a key resistance SR level right there. Okay. It may go up all the way to $21, $2,200. And then if it's a true bear market rally, it will start rolling over in the coming weeks, in the coming months. And then by the end of the year, you might actually start seeing a new low being formed. Okay. I don't quite know if we're going to hit new lows, to be honest. All I know is I don't want to fight this market. In fact, I am long in certain spot positions already. I talked about having a neutral bias over the last few days and not wanting to short the market. So again, in the advantage side, I'm not fighting this market. Okay, I'm going to let it do its thing. Whenever we feel like the conditions are getting a little bit extreme to the upside, and I feel like the market has maybe seemingly peaked, then I'm going to start shorting. But that moment is not now to me. If you feel like you want to start shorting right away, be my guest, but be very, very careful and have a game plan of the market moving against you for the next 3 to 5 weeks for another 50 or 100%. Okay. Again, non-investment advice, but just telling y'all how it is. If we look at other assets in the market, right? So almost all other assets, they sort of had this very, very big drop. Okay, Avalanche, there's Lana, Matic, everything, right? So if we sort of do a measured movement from down low here, from this high to this low, okay, a pop of the 236 fib right here should be about $35 for AVAX, okay, which kind of also comes close to where this resistance point was, this support point was right before we broke down. So maybe this thing heads all the way up to $35, $38, and then it starts to roll over again. Okay, that's AVAX. So keep that in mind. This level right here is around, I'm going to mark this out for y'all, $39. Whoops, 39. Okay. I think I talked about Matic already, but real quick, Matic, I think, exceeded a little bit further than my expectation. So this is 74 cents right there. Matic is looking like it wants to keep heading up higher. So thus far, if we take this as one big wave, right, we're already at the 382 fib. Okay, Matic can exceed all the way up to the 50 fib, maybe the 618 fib, which is about 1.19, and then it can decide to roll over. If you look at the daily consolidation right here, right, Matic had a pretty good amount of support up until this $1.26 area. A lot of sort of SR flips around here. Boom, boom, breaks up, fails, right? Rejected right there, fails again. Support found, breaks up. Again, comes back right into that level, breaks down all the way. So maybe it pushes up further. Okay. So again, it is entirely possible that we're getting close to the market topping, but it may go up further. Just anticipate when in bear markets, when you're thinking about shorting, almost always just anticipate that the market is going to move against you further. If you truly believe that, if it's going to go up further, that you still want to short. If this is the start of a new bull trend, then you're kind of screwed, right? Then you're fighting sort of, you're trying to fight the entire mountain, sliding against you. And you do not want to do that. Okay. All right. Other assets that I'm watching closely as well. Rune. So I've liked Rune for a while. I felt like their ecosystem did not develop in time in 2021. But who knows, maybe in 2022, 2023, maybe they start, getting a better footing. Rune also looks good. I think $3 is the next KSR level for Rune. You can clearly see why, right? Multiple touches right there. Support, support, support right there. Chop, 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 breaks through, has not retested $3 as resistance. Okay, so keep that level in mind as well. I think Ethereum I already spoke about, right? 750, 1750 all the way up to about 1950. That's a possible bigger SR level that Ethereum could get all the way to, in the same way that it did back here in 2018, right there, right? Before maybe it starts rolling over, okay? I will not be shorting anytime soon, just FYI. I'm going to watch the market carefully, and I won't short until I feel like the market has gotten peak euphoric, peak sentiment high, right into resistance, right into resistance across the board. If we're talking about Solana, where do I think resistance is probably going to be? It can go all the way up to about $50, $60 way the heck up here. There's a different levels of confluence for resistance points. This little trend line, right there, that it can meet price somewhere around this box in the next coming weeks, as well as this little trend line support that broke down. As you can see, support, support, multiple points of support, finally flush through that support. Maybe it turns around up here in the next coming week or two, somewhere around $58, $60 or so. Okay. Let me see here. What else? The other way to look at runners in the market is, you can kind of look at Coinalyze right here, look at the data points and look at what has a significant amount of open interest building, such as optimism, as you can see, the privacy index on FTX, mobile coin, MOB, ApeCoin, APE, Raven. So these have a significant amount of open interest. And if they have not popped a whole lot already, so maybe this DentaCoin, right? So if DentaCoin has 52% open interest gain and only 8% pop, there might be more to this move in DentaCoin left. Okay, that's how I measure, like, if something is building open interest in a significant way and it has not popped meaningfully, then it's possible that it's going to move up some more. All right. And then once again, almost always you still got to pay attention to BTC, right? I think BTC points of resistance, quite simple in my opinion. I think this is, that next point of resistance, which is $23,000. And then I think it can get, way the heck up here, somewhere around 27, 28K as a point of resistance, where market may feel like it's getting very, very bullish into this area. $30,000, obviously, before this thing broke down, was a key level of support, right? All through the year of 2000, let me see here, all through the year of 2021, here's kind of how that looked, right? This was all support back here. Okay, once we broke it, hit that as resistance right there, and then aggressively sold off. So point is that almost everyone is going to expect 30K to be broken and we start a new bull trend. But what if the market comes close to 27, 28K and then starts rolling over again? I think there's going to be multiple retests at this low, maybe even lower lows, before the market sort of creates a base and then heads on up. My thought process is that right now we might be facing a rally or consolidation similar to, say, something like this, like a few weeks of a consolidation before a big pop and then a rollover, or this multi-week consolidation before we went out for 1 to 2 months and then they had this big COVID crash, right? So who knows like how that's going to look, but that's one or two of these situations is what I'm finding more similarities with for the current trend in the market. I don't believe that this is similar to the COVID crash, just because this was sort of unanticipated, completely like macro external event that broke all markets. I think this time around, it's a little bit different because the money flows, and I think the entire cycle of crypto has also taken a hit. The overall crypto cycle is coming from the highs, right? At this point, when we had this big crash, we were already sideways for almost, a year and a half, 2 years. And then we had this capitulation and then rip up. This time around, we're coming off the highs after a massive money printing, bull market. And I think might take a while to unwind and before it starts a new, bull trend. Okay, again, that's just my thoughts. And also it could just be like this, right? Maybe we just chop in a bigger range right here, build a base for 2 or 3 months. Then we start a new bull market into, the later half of this year, right? So many different ways to look at the market, okay? Cool. So I talked about a couple of data points from the bear market stuff. I posted a little poll on my Twitter feed. Make sure y'all check it out. Please do answer this poll if you do get the opportunity to. And yeah, I asked the question about, what crypto altcoins or different projects are you guys paying attention to? That will be the next bull cycle winners. Please do let me know. Please comment on this tweet right here. I would love to hear your thoughts. Anything else you want me to cover, I'm more than happy to do it. Okay. Ethereum gas prices at the pre-DeFi summer levels. That's also interesting. The other side, Metaverse, had some really interesting, video concepts come out. I still think, NFTs and Metaverse is a good 3 to 5 years, behind, but I'm open to still looking at potential investment opportunities, potential research opportunities. Okay. Let me see here. Maple Finance. This was also a fascinating little lending update. And then finally, I just want to leave y'all with this, right? If you have been watching my videos for a while, or you're simply just, in this bear market, right? If you're surviving, you haven't completely blown up your capital, and you haven't gone to zero, right? You still can make it for the next bull cycle. All you have to do is stay determined, stay positive, work diligently, either building or researching or investing, being an analyst, whatever you need to do, right? Or if you need some research work to do, come join our community. I often have people do freelance research work for me, and I pay them. If you are interested in a job or temporary job for research or really anything, come join the Discord community. The link is below in the description. And, maybe we can work together, and you can do some research for us, drop some alpha, and you can get paid as well in the crypto space. All right. So if you're surviving right now, kudos. Seriously, give yourself a pat on the back because you deserve it. I know 2018 and 19 bear markets were tough. I personally believe this bear market is even tougher. It has really broken a lot of people, broken a ton of good funds out there. I think crypto has sort of become this toxic asset class right now, but I still believe it is the future. And that's why I'm still here talking and investing and, still being part of the space, doing whatever I can to grow it. So again, if you want to come join our community, be a research analyst or provide or contribute in some way, we may have a job for you, or you're simply just surviving and trying to be part of the next bull run. Again, kudos to you. Much love, much respect to you. Come hang out with us because we are also survivors in the Alpha Trades community. All right. We know exactly how to get through bull markets and bear markets still intact. Okay. Good luck, everybody. Take care. I wish you guys the best of luck, and we'll talk soon. Cheers.